Hey traders, this is Blake Morrow with Traders Summit. And with me once again, I have Mr. Michael Brown, Head of Market Intelligence over at Caxton FX. Michael, how are you?
Blake, I'm very well. How are you? It's been a while.
I'm great. It's great to have you here. And my first question to you out of the gate is, are we going to have pigs flying by your window here in the next couple of months? What do you think?
I knew you were going to refer back to that now infamous quote, and I've sat in a windowless area of the office for a reason. Yes, that famous call I made about the ECB and pigs flying being more likely than them raising rates has come back to haunt me a little bit. The hawks have been let loose over in Frankfurt. So 25 basis points in July, another 50 basis points in September to follow that. But I think it's interesting that although the ECB have been as hawkish as I can remember them being, the euro is actually marked down 2 or 3 big figures since their last policy decision. Yeah. And I think that's the market saying that actually there is a limit to the degree of hawkishness that the ECB can get to. There is a cap as to how high the ECB can raise rates without entirely wrecking the Eurozone economy. And if you look at spreads in the Eurozone, the BTP Bund spread at its widest since April of 2020, I think that probably tells us all you need to know about how the market views the fragility of the Eurozone economy.
Well, and I think the big bet has been, at least in recent months, is we were going to see the ECB become more hawkish than maybe the Federal Reserve, and we are on the eve of a FOMC decision. So by the time people watch this, things might have changed a little bit. But for right now, expectations are ratcheting up for a more aggressive FOMC. So, I mean, do you see any light at the end of the tunnel for the euro? Because right now you're starting to hear banks, some big significant banks are now starting to say that parity is right around the corner. So what are your thoughts as far as the future price path of the euro?
Yeah, I mean, I think people who've kind of followed my analysis for a while will know that I've never looked upon the euro particularly fondly, even when it's been rallying. I think that the path of least resistance is certainly lower over the medium term. As you said, the Fed show no sign, and obviously we don't know what they're going to say at this point, but they show no sign of slowing down when it comes to raising interest rates. You've got inflation running at 4.5 times their target. They cannot slow down. There's no way they can pivot just yet. But I think central banks in Europe, and I'd lump the Bank of England in with this, are much more concerned about the fragility of economic growth. And you're starting to see momentum be lost very, very rapidly, not just in the Eurozone, but in the UK as well. So I think euro dollar downside, you're looking for a first test around 103.40. That's the recent low that held. But I don't think that's going to hold on a retest. And I think parity is within reach. And then when you look at cable, I mean, at the time of recording, we're trading around 120. I mean, the pound's in free fall, really, and I see no reason to be buying sterling at the moment.
Yeah, I was gonna ask you, why is the sterling underperforming? I mean, I understood that when Boris Johnson was going through his no contest vote, people were a little nervous maybe about holding sterling, but really is confidence that eroded for the Bank of England? And give us a little. Since you are in the city of London, tell us how things are there and how the sterling should be trading in your view. And I know you just said it shouldn't be trading higher. It obviously isn't. How low can we go?
Well, I think the market's got it pretty much right when it comes to cable at the minute. I mean, if you look at the UK economy, growth, well, the economy actually contracted in April unexpectedly. So growth weakening very, very significantly. We've got inflation running at 9%. That's going to head north of 10%. We've got a slightly wonky way of calculating energy bills over here where they only go up twice a year. But at the minute when they do go up, they go up by about 50%. So the next rise in energy costs kicks in October. That's going to send CPI well north of 10%. Consumer confidence is really, really poor. People are really starting to tighten their belts, focus on, spending on staples rather than on discretionary items. And that's only going to get worse as we move through the remainder of the year. And then, of course, you've got the political situation as well. How long is Boris going to cling on for? And also Brexit risks coming back onto the horizon as well, given that the Northern Ireland protocol has pretty much been torn up. So I think sterling's fairly priced where it is. I think a fall below 120, just because it's a psychological level more than anything else, would maybe get a few interested in buying the dip. But from an economic perspective, there's really nothing out there that screams at me that sterling should be rallying right now.
Okay, well, you know, when you're trading the euro or the sterling, you then have the euro sterling pair that is quite active amongst. Yeah, and we're trading above 86 pence right now. So, do you have any views on the euro sterling and where you may think it might go?
Yeah, I mean, it almost pains me to say this, that I think the euro will appreciate quite significantly against the pound, given how bearish I am traditionally on the euro and given how sort of bullish bias that I maintain naturally on the pound. But I do think that we are going to see euro sterling continue to move higher. If nothing else, we've got that huge divergence between the ECB, who are ridiculous, you know, in comparison to the Bank of England, are very, very hawkish indeed and raising rates, and the BOE, who, when they meet on Thursday, that yes, they're going to hike rates, but they're likely to make another dovish pivot, and probably August, another 25 basis point hike in August is the limit of what the Bank of England are going to deliver. So, in terms of putting numbers on it, you know, as you said, euro sterling easily north of 86. I wouldn't be surprised if we're north of 87, to be honest with you, by the time this recording goes out. The first region I'd be looking at is actually the kind of triple bottom that we put in 2020, which comes in around 88.70, which I know that sounds like a big move, two big figures, but I think we could get there in the short term.
That's interesting. You know, I want to ask you a little bit about commodity currencies. I'm going to throw you for a little bit of a loop here. You know, you've seen like earlier in the year, earlier in 2022, you saw like a outperformance of the Aussie dollar, the Kiwi dollar, and even the Canadian in certain respects. They are trading a little bit heavier. They're trading, I guess, maybe with more of a broad dollar perspective. But do you have any opinions on commodity currencies in an inflationary environment? I know we're in a risk-off environment, and you know, obviously the S&P and other indexes globally are really under pressure here. You know, risk assets just in general with cryptos and everything else. But do you have any opinions on the commodity currencies and where you see those moving forward?
Yeah, I mean, I think it's an interesting kind of trade-off going on there between the impacts of commodity prices, which are perhaps quietly or going under the radar a little bit, rising very, very slowly, but very, very significantly at the same time. I mean, you know, just taking it back to the UK, petrol prices at the pump here are hitting $2 a litre, which is unprecedented. And oil shows no sign of slowing down its ascent. And those commodity currencies, that bullish influence is kind of being netted off by the massive risk aversion that we're seeing in financial markets at the moment. And I think I would perhaps kind of split the commodity currencies in two. And I'd say the Aussie and the Kiwi dollars, their fortunes look pretty bleak. I'm pretty bearish on stocks at the moment. I think the S&P is probably going to 34, 3,500, around that region. Unless the Fed pivot, there's really no reason for dip buyers to come in. And I think that's going to pose a stiff headwind to those currencies. But I'd perhaps treat the Canadian dollar separately to those two. I think the loonie is going to benefit from the Bank of Canada pretty much keeping pace with the Fed when it comes to raising rates, and also that tailwind provided by firming oil prices. So if it's not the dollar, then the other currency in G10 that I'd be looking to buy at the minute is the Canadian dollar.
Interesting. Okay. Well, as a neighbor to the United States, that's something that I'll be pondering. And obviously, with crude oil prices as strong as they are, I want to ask you one last question. This is more, I want to say it's theoretical, but you know, we're going into the FOMC meeting. People are going to be watching this post FOMC meeting, this video, towards the end of the week. So I'm not going to hold your feet to the fire asking you, where do you think the market's going to be? But something happened yesterday where we got a Wall Street Journal article that came out and ratcheted up interest rate expectations to 75 basis points from 50, and the market started to think about that, reprice. Do you think that this is, and I know this is kind of a silly question, but do you think that is more of the Fed's doing? Since they're in a blackout period, they can't really discuss, their thoughts as far as the members go, and maybe they put out some journalists to get the message out ahead of their meetings. How are you reading that? Ahead of the FOMC? What do you think?
I think, yeah. This I could have a lot of egg on my face when people watch.
Of course,
this
I mean,
and
I'm not going to hold your feet to the fire for this. So go ahead, feel free.
I think there's two ways you can interpret the article, and two things the Fed can do now that this Wall Street Journal article, and actually I think Bloomberg and the MIT had similar pieces themselves.
Yeah.
Either it is, as you say, the Fed going, inflation's at 8.6%. We need to really stamp down on this as hard as we can. It's a trial balloon. It's teeing the market up to expect 75, and they go 75 on Wednesday. Or it's a trial balloon saying, we are mulling over a 75 basis point hike, such that when they come in with 50, actually there's a bit of a relief rally. I think I kind of favor the former idea at the moment, because if the Fed come in, do 50, there's a relief rally, and that's going to loosen financial conditions. The last thing the Fed want is looser financial conditions. The whole last 6-9 months have been to try and tighten financial conditions. You don't want to undo that at one meeting. What I would say, though, is that the Fed are going to have a bit of a problem when it comes to delivering a 75 basis point hike on Wednesday. I hope this comment ages well. And I think that the problem is kind of there's two strands to it. Firstly, it's going to look like the Fed are panicking. It's going to look like the Fed have taken that inflation data on Friday and gone, wow, we really are further behind the curve than we thought. We now need to panic and hurry and rush to try and get rates higher to neutral as soon as possible to really get down on inflation. And I think the second thing, which is actually more important in my mind, is that this pretty much would, if they go 75, almost destroy any credibility they had left around their forward guidance, because they have been so concrete in June is 50, July is 50, September is 50. They have been so explicit with the market that that's what we need to expect, that if they suddenly 2 days before throw in a very unsourced article saying we're going to do 75, how are we going to believe what the Fed tell us in their speeches after the next decision? And that might not be a problem now, but we're going to go into a recession in 2023. And if you have no credibility around your forward guidance, then I think that's going to be a big issue that could come back to bite them.
That is some really, really great points. And, there's been this circling theory around the markets that, with a more aggressive 75 BPS hike, then, the market might actually see some relief that the Fed's trying to get ahead of the curve. But I see your points as well. It's going to be an interesting reaction. And I'm not, like I said, your comments may age well, they may not, but look, a lot of the markets and what we do as traders is we react to these events as they're happening, and that's the nice thing about being a trader, is being able to kind of go with the flow as that news is happening. But Michael, I love having an opportunity to meet with you here at the Traders Summit site, and I want to say thank you for taking the time with our community. If traders are just hearing about you for the very first time right now, how do they follow your work?
Well, firstly, thank you very much for having me once again. Obviously doing something right if you keep inviting me back. They can go everywhere. The website, caxtonfx.com/business. We post some videos, data reaction pieces, daily commentary, my sort of random ramblings on the market. And if you want even more random ramblings, then go to Twitter, Mr. M. Brown there. And that is slightly more uncensored than what we publish on our website.
Well, I love your videos every week. I like to watch them myself. We publish them here on the Traders Summit site. So if you all are at home, your home office, you're enjoying listening to Michael Brown, make sure you give him a thumbs up on YouTube, subscribe to the channel so you don't miss any more of our content. Michael, thanks for joining us today, and good luck this week with all the central banks meeting. We didn't even talk about the Bank of Japan, but I'm sure you will on your video this week.
I certainly will. And I also need luck dealing with the heat here in London as well. Hopefully I'm still here and haven't melted by the end of the week. But thanks again for having me, Blake. Great to catch up.
Great to have you here. Take care.
Cheers, mate.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.